everybody. Hope everyone, excuse me, hope everyone's had a fairly good weekend and was able to enjoy it. So I wanted to come on here and talk for a few minutes really about why do trading plans fail overall. And I'm curious for those that are in the comments, if anyone has any idea as to why that is. And I'd be also curious to see, does anyone have any sort of trading plan that they would be interested in sharing? Give me just 2 seconds here. Let's see here. So the first thing, let me pull up had some notes here, and of course I'm forgetting what I was going to say. So trading plans. An the problem with the trading plan is a trading plan can be very, very vague. I can buy, for one, an easy trading plan is second entries, or I'm going to trade breakouts that break above a trading range, or I'm going to take failed breakouts of the range, the high of the day, the low of the day. And what's the issue with that? The issue of it is it's too vague. And because it's too vague, you don't actually understand what the system is or the trading plan. A trading plan and a trading system, it's basically the same thing. A system, if you think about it, Walmart as a company has a plan. They have an idea of how they operate. It's a system of how they operate. And the question is, how deep does the actual plan go or the system go? And the more deep it is, the more deep the understanding, the more one is going to be able to operate the system in the right way. So let's look at an example. And again, if anyone has any idea of their own trading plan, I would love for someone to comment what it is. So let's see here. So here is an overall plan. Let me do this actually. Let me take this. I know this looks a little weird for a second. Turn that off. Stop sharing this. There we go. So we're going to go to, let's just say we're going to take second entries. And so I'm going to take second entry buys and second entry sells. So that's going to be my trading plan. Here's a day. And I'm going to go to the very next day. So here's where we are. And if I look at this environment, I'm going to take second entry buys, second entry sells. Well, here's a low 1, so bar 3. Bar 6, nope. We still don't have a second entry, so maybe there's a high 1. Maybe that's another high 1. There's a high 2. And we're forming a small pullback trend in this case. So if you bought here or here, this would work. So let's find the next second entry. There's a high 1. There's a high 2. So 2 legs down. I'm just going to buy above it and put a stop below the bar. Doesn't trigger. Let's say it triggers there. And then I got stopped out. But I just took a second entry buy. Well, the problem with that argument, and let's just keep going. There's a bear breakout. There's a low 1. Maybe this is a reversal up. Maybe that's a second reversal up. So maybe you buy that bar. And in this case, if you were fortunate and you got out here, you made money. But if you waited, you got stopped out. Low 1, low 2. So maybe you take that sell. Maybe you don't. If you took it and you got out soon, you didn't get stopped out. But here you did get stopped out. Now you have a low 1 or a low 2, and now you have a low 2. Do you take this sell? Let's say you do. Never triggers. But then you have a high 1, high 2. Is that a high 3 or is it a high 2? Is it a second entry? Is it a triangle? Let's say you buy above it, stop below. And in that case, let's say you get out up there. Now let's go to the next day, because I really want to paint the picture of why am I talking about this. Here's a high 1, there's a high 2. You buy it, and look what happened. In this case, you made money. But then you have a low 1, you have a low 2. Do you sell below that? Do you sell below the bear bar closing on its low? And in this case, if you did, it worked. But then you have this here and here. Do you buy above that? So what is the overall point? The overall point is, I'm not saying that one should take just second entry buys or second entry sells. What I'm trying to say is, the more deep you can be with your understanding of what it is that you're trying to do, the better off the system or the trading plan is going to operate. And the reason for that is relatively simple. There's various ways the market can open. There's only really, 2 or 3 types of opens you can really get. You can get a trend from the open, you can get a trading range open, something like this, or you can get an opening reversal. You cannot get anything outside of those 3 environments. Now then the question becomes, how many of those environments are there on each one? So how many types of trend from the opens can you get? How many types of trading range opens can you get? And how many types of opening reversals can you get? And then you have to think about, what about the middle of the day? Middle of the day, most of the time, it's a trend reversal, trend resumption type of environment. But sometimes you get a day that continues. And therefore, the point is, you have to take an idea and individually study it and really understand it over and over and over to a very deep degree to really trade it. And this goes back to my overall idea. I'm going to turn the screen off for a second. This goes back to the overall idea of what I was talking about, and that is why, here we go, why do trading plans or trading ideas not tend to work? The first one is, you really don't understand the system. So here's what I invite you to do. As far as an action plan, take your idea, whatever your trading plan is. This is a very good kind of test. So right now it's 5 o'clock Central Time. Monday, the market's going to open the U.S. session in about, 15 hours. So if we take that, the market's going to open in, let's say, 15 hours. The first question I would have for everybody is, do you actually know with full confidence what your plan is going to be and the way you're going to trade and how you're going to trade and the risk you're going to tolerate and where you're going to set a target, where you're going to set an exit? Do you understand all of those pieces before the market opens tomorrow? And the next question is this: do you understand it to such a degree that you understand the likelihood of the different situations? So what are the scenarios that it's going to succeed? What are the scenarios it's going to fail? I've said it many, many times, and for those of you that'll be joining me in Systems Academy, for those of you that are thinking of Systems Academy, those of you that'll never join Systems Academy, I'm going to start the group off with obviously talking about breakouts and second legs, and I'm really going to start them off with understanding a 3-bar microchannel. Why? Because a 3-bar microchannel is relatively easy to find on a chart. And if you can figure out the right variables, the filters, such as leg counting and the market context, you can think about that as market cycle, it's pretty reliable. And therefore, you can better understand, if you really, really go deep in that one topic of 3-bar microchannels, you can very much go into what are the likely outcomes of that 3-bar microchannel. So let's talk about the next portion of a trading plan. Why is it that most plans don't end up working? Well, the answer is they don't believe in the plan. And so I would ask anybody to either make a comment when you're watching the video, while you're watching the video, or during the recording. Have you ever been in a trade where have you ever been in a trade because it was a second entry buy? Let's say, so you took a second entry buy, and all of a sudden something happened in the trade where you had no idea what you were supposed to do. I call it the deer in the headlights kind of moment. So for example, you're in a trade. Let's just take this, share this screen. So we're in a trade, and let's just say for a second let's just find an easy example. Let's say I'm gonna find something that is here we go. This is a good one. So we've had a sell-off, so a spike in channel. We're in a trading range. The market opens, bar 7's big bull bar. And then we see a big breakout. We see a second leg up. And let's say, yeah, this is going to be a small pullback trend day. We've got all these targets not far above. I'm just going to buy. And then all of a sudden you see this really big bear bar and you think, what in the world? This channel is strong. This, is a breakout, second leg up. We're breaking out of this range. Why in the world are we getting this bar? And then, oh my gosh, we got another really big bar. And I wasn't anticipating that. Well, that's the issue. The issue is you see a breakout and follow through. You see a second leg up, but you haven't accounted for the different situations. This right here, strong breakout, it's going to get a second leg, most likely. But why is it pulling back so far? This is a tight bear channel. This is a trend line break. And it's basically a trend line break in a major trend reversal. Most major trend reversals lead to sideways trading. And look what happened, big sell-off. Now, what if you looked at this and you sold the close, bear breakout and follow through? How would you feel when you saw this? You'd be confused and disappointed and really upset because you'd be thinking, that this, I didn't plan for this. I thought we were going to get a second leg down. It's not happening. Well, again, it's a retest of a bear trend. So what's the point? The point is, in order to really follow the system or trading plan, you've got to believe in it. And that means you have to have enough research, back-tested research, and you can back-test it by purely looking at those specific trades. You can back-test it by simply looking at lots and lots of charts. Let's just look at the Globex. Globex just opened. I didn't think about that. Okay, big bear bar. Do we sell it? It's easy to look at that bar and think, oh my gosh, that's a really big bar. I'm just going to sell the close of this bar. And in this case, it's probably not unreasonable. We may go a little bit lower. But what's the chances? What's the expectation here? What's the chances we're going all the way here before we go here? So if you're short, let's pretend you're short. I'm not short, but let's just pretend we are. If we're short right now and we see this bar going up and going down and we're thinking to ourselves, dang, I don't really know what is my expectation behind this trade? In other words, where do I put a target? Where do I put a stop? How do I exit? Do I exit early if the market hesitates? Do I wait for the bar to close? Those are all variables you really need to understand. It's kind of like a pre-flight checklist. You need to really understand it before you get into the trade. And the more things that you don't understand, or the more things that you have that are gray, that you have questions and you're not quite sure what you should do, the more times you're going to experience, basically analysis paralysis, deer in the headlights, and you're going to freeze. And so a good test is when you look at your trades, ask yourself, do you really understand why you're taking the trade? If you don't understand why you're taking the trade, then that's a pretty good measurement that, hey, maybe I don't understand this specific setup all that well. And then the third reason is you don't have the discipline to follow your system. I talked about this, over the past couple of days. A lot of people have great trading ideas or trading methods. And the amount of people I talked to, the amount of people that told me this in Systems Academy, when I review their trades or review, their overall work, what they're doing, and they would have an idea of the way they wanted to trade. However, what would happen is they would get stopped out. They would take a loss on a trade and they would get frustrated. They'd get frustrated that the trade didn't work, and therefore they would lose their discipline. And because of that, because they lost their discipline, they would take a lot of losing trades. So the point is, with your trading, you need the discipline and accountability to follow a trade. And the reason that's actually important for a lot of reasons. A lot of times we look at an overall trading plan or a trading idea, and we end up finding that the idea is not working. But then when we look further into the details of what we're doing, we realize that the reason that it's not working is there's too many dumb trades. If you go back to Al always says most people take enough winning trades to do well. So if most people take enough winning trades to do well, why do most people not do well? The reason is they take too many bad trades. They take too many trades that are just bad math. And so in this case, they take too many trades that aren't part of their plan. Does anyone remember the type 1, 2, 3, and 4 trades I talked about last video? I want to give that a second because I want to hear from some of the comments. Who remembers what I talked about with type 1, 2, 3, and 4 trades? And is anyone willing to share what percentages of type 1 and 2 trades they had and what percentages of type 3 and 4 trades they had? Type 4 is the worst. That's exactly it. Yes. So let me pull up the screen here for a second. Give me 1 second to get a sip of water. That's exactly it. Type 4 is the worst. And again, I didn't make any of this up. This is from someone, Andrew Miniker, which, remind me, I'll put his name in the chat. But he basically is the first person I heard kind of coin the term, so to speak. Is actually someone from my Systems Academy that told me about it, that was in my Systems Academy class. But I want to give credit to the guy that obviously made that up. But the point is this: most people have a reasonable trading plan, and they can't follow it. And they can't follow it because they have too many type 3 and 4 trades. I had a student who, it's kind of funny looking back. In the beginning of Systems Academy, they build their objectives and they build a back of the napkin study. The back of the napkin study is really simple. It's basically, here's a trading idea. Go write it on the back of the napkin, see if you like it, and test drive it, so to speak. So 3-bar micro channel. Do you believe it's valid? And then collect some samples of it, and let's throw it on the board and see what are the results. So it's a very simplified study to see, do you agree with the idea? Is it even worth trying to make a trading plan out of? And this individual, I think they made a breakout and follow through system. And they came to me, they had 100 trades, and they were measuring it on 1 micro. And this is all back tested, so it wasn't actual forward tested. So forward testing is real data. Back tested is obviously back tested data. And they had 100 trades. I think 70% of them were profitable, or 68% were profitable, and the others were not profitable. And he was frustrated because out of $500, he was down $150 on the system. And he said, I thought breakouts and second legs, breakouts get a second leg, but, my system so far it sucks and it's really disappointing. And he said, I'm discouraged because I just, I spent, 5 or 6 hours the other day writing all this, taking all these, logging all these, trades that I found on my charts, and it sucks. It doesn't work. And we had a video call and we looked at it, and basically, long story short, when we got rid of the third leg, the system worked better. It actually had a positive result at the end of 100 trades. Then we started looking even further at second legs and what could we do. So if we stop taking the third legs in this situation, the next thing is what do we do if we stop taking the second legs in this situation? So basically, I kind of think of it as you're kind of playing detective, where you have a list of your trades, your type, 1s and 2s and 3s and 4s. And the first thing you do is if you take the idea and you get rid of the trades that aren't part of the idea. So you get to type 1 and 2 trades. And in this guy's example, he didn't have any type 3 and 4 trades because it was back-tested data. So we take the type 1 and 2 trades, and then we start really getting in the weeds of the idea and thinking, okay, what type of trades are getting the most success and what type are getting the worst success? So out of these breakout and follow through trades, there's actually a lot of trades that don't really do all that well. They basically, for example, if you trade a breakout and you buy the close and you've been in the trade for 10 closes and you're right at break even, it's probably not going to be that great of a trade. So what one idea was, we ended up cutting the trade after a certain number of losses. And then the other thing we did is we ended up limiting this person's ability to scale in on a certain type of leg. And so the point with that is that's basically what the whole program is with Systems Academy. You take an idea, and if you like it and you agree with the idea, you start refining the idea. And then if we can really refine the idea and really get an idea, if we can really, I keep saying idea, if we could really define the actual system and what the system is and how it's going to operate, what can we do? We can start to forward test the idea. So this individual, he was able to forward test the idea. And then a whole nother set of frustrations came in. He didn't have the discipline at first to trade the system, so he had to work on his discipline and be held accountable to actually taking the trades. Once he was able to do that, the quality of the forward testing improved. Then he was able to see, okay, if I'm taking these trades in this environment and here's the overall result, now it gives me an idea of what I can risk. So there's all sorts of phases you go in, and a lot of those phases can take more than a year. But the point is this: a lot of people have great trading plans and great trading system ideas. The problem is they don't understand, for one, they really don't understand why they're even taking, they don't understand why they're really taking that type of trade. In other words, I'm selling a low 2 at the moving average or buying a pullback to the moving average in a bull trend. I get the logic. I get that Al says I should do it, but I really don't deep down understand why should I do this? What's the real expectation? I think about breakouts in a small pullback trend. A small pullback trend is like a freight train. It's just a, locomotive just going down the tracks. And if you try and get in front of the locomotive, you're going to get crushed. And therefore, if you try and fade a small pullback trend, it's not going to work. So when I think of small pullback trends, what I think about is, at best, if I counter trend trade this small pullback trend, it's really just going to go sideways. And therefore, it's really not worth counter trend trading. How do I know that? Because I've had a lot of time seeing small pullback trends and being on the wrong side, that's a deep-rooted belief of mine now. I have a deep-rooted belief that if I trade the open during the first bar of the day, most of the time it's more impulsive than anything, and it's not going to work well. Why? Because I've looked at a lot of bar ones on the open, and I've seen how that plays out. So the point is this: if you have a trading plan, you have to first really think and really understand, do I actually have a plan? Do I actually know what my system is? Do I know what my entry is? Do I know what my exit is? Do I understand how am I going to bail out of the trade if the trade's not working? Really got to understand those things. The second thing is, you don't believe in your system. Easy answer is, if you want to believe in an idea, you really have to understand and prove it. There was a great story I heard from, I think it was someone in my Systems Academy class that mentioned it to me. He told a story of, and I think I shared it in the trading room at one point, and of course I'm for blanking on let me look up the guy. He was the Seattle Seahawks coach during the Super Bowl when they lost at the 1 yard line. Let's see. Why am I blanking on his name? Pete Carroll. So Pete Carroll, he's in the Super Bowl. I think Seattle, the Seahawks, were on the I think they were on the 4 yard line with 4 seconds left in the game. All they had to do was, I can't remember exactly. I think all they had to do was make 2 points and they would basically win the Super Bowl. And Pete Carroll, they're at the 1 yard line. Everybody thought this would be an easy, I think actually they had just scored a touchdown. So basically everyone thought that just run it up the middle with your running back that's really great, you're going to win the Super Bowl, and Seahawks going to win victorious. And instead, Pete Carroll, he called a play, I think it was a post, where basically you have the quarterback and receivers and, a receiver or tight end ran and did a quick post into the end zone, and the ball, I think it got intercepted, or I think it got blocked. And everyone stood there in shock as time ran out and the Seahawks lost the game. And everyone was calling, demanding Pete Carroll be fired. He's the worst coach in the world. What an idiot for running that type of play. And someone actually wrote a book and included this play in there. And they studied this exact play for years. And they came to the conclusion that specific play at that specific yard line had I think it was a 94 or 95% success rate. And it just happened to be that last play in the Super Bowl was the 5% of the time where that trade or that play, if you will, ended up failing. And The point was, I think, if you ask Pete Carroll, of course he would rather have ran a different play that would work, but at the end of the day, I believe he stuck to his belief that that was actually a good play, and it made logical sense. And it's no different when you're trading. When you're trading, if you feel uneasy or you feel upset because you took a trade and it didn't work, then the reality is you don't really understand why you're probably taking the trade. So last thing I'll leave you with is, if you have a lot, and this is, I mentioned this in the last live stream I did I think yesterday. If you have a lot of type 3 and type 4 trades, which means you basically aren't following your plan and you're making money, or you aren't following your plan and you lost money on the trade. A type 3 is you didn't follow your plan and you lost money. And then a type 4, which is the worst, you followed your plan and you didn't, and you made money. You have a lot of those trades, eventually it's not going to work out. And again, that's all, this is, I'm paraphrasing something that someone at my systems academy mentioned to me, and that they learned from someone named Andrew Mineker. So I'm not making any of this information up. You can, if you go to my last live stream, I think I put his name, Andrew Mineker, in the chat. You can actually click on it and check out his website. He's got a lot of great information. But the point is, if you want to be more consistent in actually following your plan, you should better define your plan. So that's really it. And, as always, I hope it's helpful. I'll make more videos on this down the road. A little bit of a homework to think about: 3-bar micro channel. If you don't have a trading idea or a trading plan and you want to try to make one, I think a 3-bar micro channel, try to take the first leg, is a phenomenal trading plan. Now, that's a trading, I'm saying trading plan is a generalized idea. There are so many things that go into that. For one, you got to understand, okay, 3-bar micro channel. Well, what type of 3-bar micro channel? Am I going to allow big bars, small bars? Can the bars have overlap? You got to decide what type of market context, market cycle that's in. Are you going to do it above the moving average, below the moving average? How many bars are you going to stay in the trade? Are you going to scale in? Are you going to buy the close? You're going to buy a pullback? Where are you going to put a profit target? How are you going to exit the trade? How are you going to take, are you going to maximize profits if you get a buy the close bar and immediately it goes 1 times your risk? How would you even know what 1 times your risk is if you don't even know where your stop is? And is your stop going to change based on certain situations? And we hadn't even addressed the financials. Are you going to risk 1%? Are you going to risk 0.5%? Are you going to, what type of risk are you going to take? And then, before we even run or trade our trading plan, we've got to ask ourselves, what in the world are our objectives? What are our objectives? Obviously, it's to make money, but realistically, how do you want to perform in a month, in a day, in a year? Because all of that actually matters when in the method you're trading. So if you want to have a 10% or a 5% maximum drawdown, but you're going to risk 50% of your account balance on every trade, you're guaranteed to have far more than a 5% drawdown. And therefore, your objectives are not going to match your strategy. That's kind of an extreme example, but it's overall the same. And then if you want to, you have to think about how many days you're going to trade in a year, how many trades you're going to take in a day, all those little pieces. So I hope this video is helpful. Again, as always, if you want to learn more about Systems Academy, or if you want to look at it, you want to apply, reach out to me, reach out to James. We have spots left. Ali, I think he's full. If you just want to have a conversation about it, more than happy to do that as well. I'm not going to, as I tell everybody that ends up applying and discussing, the first thing I tell them on every call, I'm going to be the last person to pressure anyone to do anything, because at the end of the day, I want people there that want to be there and then understand why they're joining in the first place. And then let's see here. I'm a wise man. Ask the question. Maybe we'll end it with this question. Hi, Brad. Hope you are well. Can I trade 3-bar micro channel on a 15-minute time frame, but enter on the 5-minute chart? Now that is actually a really, really good question. And this shows me that this person's actually had a lot of thinking about price action. So traders, this is kind of maybe a step above some of the stuff we're talking about. Traders actually do this all the time. They take a 15-minute or a 30-minute breakout and they drill down to a smaller time frame. You often hear Al or even Ali talking about how do people, how do you trade a 1-minute chart? Well, the answer is most traders, when they're trading a 1-minute chart, they're taking a 1-minute chart to get a pullback out of some sort of 5-minute breakout. Same thing with a 15-minute chart. If you're trading a 15-minute chart and you see a breakout or a 3-bar microchannel, you can go to a 5-minute chart and look for a 2-legged pullback, which is going to be, basically an implied pullback on a 15-minute chart, and enter there. So you can absolutely do that. Price action's fractal. And the only danger with that I think I would really, really steer clear of, because it can really mess you up if you're not careful, is when you're taking a higher time frame trade on when you're trading a 5-minute chart, I really would not go down to something less than a 5-minute chart. I think that's just really, really dangerous, and I think it'll really mess you up. So for me, I think 15 minutes fine, and you can drill down on onto a 5-minute chart for the entry. But I would rather, at least starting out, I'd rather see someone, make a trading plan or an idea on a 15-minute chart and really understand it. And then once they get good at that 15-minute chart, then go to a 5-minute chart. Because what will end up happening is, do you manage the trade? So you have a 15-minute chart, you enter on the 5-minute. Now the question becomes, how do you manage it? Do you manage it based on the 15-minute chart? Or are you going to manage it on the 5-minute? And then the problem really will become that you end up managing it on the smaller time frame. Now, I don't have an issue with somebody, they see a breakout on a 15-minute chart, they think it's going to get a second leg, so they start looking for something like a wedge bottom on the 5-minute. I don't have an issue with that as long as they're going to trade the 5-minute chart. Let me see if I can just find an example really, really quick. So something even like this. So we have this big bear breakout bar, 735. Let's just see if, yeah, that basically works. So you look at this bar. This is a really big bar, and it's breaking out of a trading range. And I say that kind of joking, but there's a high probability, at least 60% chance, probably more, that you're going to get a second leg down. So it's a breakout of this trading range here, probably going to get a second leg. So what can you do? Well, you can wait for a bear bar closing on its low and sell there, or you could sell with a limit order. Or the better thing, so let's just say this is 730.45. You look at that bar and you think, that's pretty strong. It's going to get a second leg. Maybe I'll go to a 5-minute chart. So we'll go to a 5-minute chart. So there's that bar. Now again, we're looking at 745, which is right here. I don't want to sell below that bar because it's a low one. It's probably going to get a second leg up after this prior bar. But I do believe we're going to get a second leg down. So what can I do? I can look for a pullback. Okay. I don't really, maybe, you could probably sell that and make money, but I'd really like to sell below a bear bar. Okay. We get this breakout bar here and this pullback. Well, we may not get a bear bar closing on its low here. So you could sell there, or you could sell below there. Now, if you're really aggressive, leg 1, leg 2, we're getting dojis. So it's an implied spike in channel, and then a buy climax on this bar. That's a bull breakout of a bull channel right at the moving average. This is going to fail. Now, what if we took this one step further? And I hope everyone can actually see. Whoops. Yeah, I knew it as soon as I was thinking it. No one can see my chart. It's always kind of fun when you mess up these live streams. And the problem here is it's actually delayed. So by the time I realize I'm messing it up, it's many, many seconds. It's at least 5 or 6 seconds delayed. So back to what I was saying. We'll do it a kind of a speed round here. We have a big bear breakout here, big bar closing on its low, tight trading range. You know you're going to get a second leg down, but I don't want to sell the close. I want to sell below a bar. We have a 1-minute chart, or excuse me, a 5-minute. Okay, there's the 745 bar. So this is that 15-minute close. I don't want to sell here because it's a low one, and there's probably going to be buyers below. Well, look right here. We have a spike and channel, bull breakout, channel, bull breakout, so a bull breakout of a bull channel. And in this case, we have a breakout bar that pulled back. So we may not actually get a bear bar closing on its low on this time frame. But what if we did this? Here's a 1-minute chart. Got to take this a little bit of extreme. So what do you notice? We have a trading range. We have a spike and channel, 2 legs down, and a big bull bar with follow through, but fairly weak follow through. And it's a fairly deep pullback here. And then a big outside down bar. That is trapping traders. So what do some traders do? They sell below this bar, stop up here. And you can see it sold off consecutive bear bars, tried to pull back, but this is a trading range, more likely. Other traders, they sell here, and then others, they wait for a second entry, and then you get, obviously, the sell-off. But the problem with that method is now you're looking at a 1-minute chart instead of the 15-minute chart. So for me, I generally, if I'm going to do that, I like to look at a 15-minute and then maybe a 5-minute, and I'll just sell the close. I'll basically wait to see if the pullback is weak and looks like a leg in a trading range, and I'll sell, expecting a reversal down. So I hope this is helpful. If it is, that is great, and I'll make more of these live streams fairly soon. And hope everyone has a great trading day on Monday. Remember, what I want everyone to think about coming into Monday is really think, do I have a plan? So again, it's, why do most trading plans really not work? You don't know what your system actually is. You don't believe in your system, and then you don't have the discipline to follow it. So my first question for everybody is, let's make sure we actually know what our system is. And if we don't know what so on Monday, that's a good test. Do you actually know what your trading plan or trading system is? And as always, if you want more help with that, reach out to me. Be glad to help you on it. You can leave a comment here, go to the Systems Academy page, whatever you want to do. And other than that, I hope everyone has a great Monday with their trading. And again, really think about it. Do I know what my plan is? And then the next thing to think about is, can I log my trades from type 1, 2, 3, and 4? Because the more I can understand that, the better off I'm going to be. And again, because I've mentioned, and I want to give credit to this person's work, you can go to Andrew Mineker, his website, if you want to learn more information. He's got a lot of really good stuff on YouTube. So I believe that's how you spell his name, but really good stuff. So check him out on YouTube. I think everyone would like him and agree with a lot of the stuff he says. So I hope everyone has a great evening, and I will talk to everybody soon.